January 1st, 2026. While you celebrated New Year, American financial dominance cracked. Not with headlines, with mathematics that stopped working. I'm Marcus Caldwell, and what I'm showing you isn't theory. It's a documented shift making your retirement account part of the largest economic experiment in human history. $318 trillion. That's not the national debt politicians discuss. That's the real number when you account for everything America owes. And China just activated technology making financing this debt impossible. When politicians mention $38 trillion in national debt, they're showing the tip of an iceberg. As of January 7, 2026, gross national debt stands at $38.43 trillion, but that's only money already borrowed. Medicare alone carries $52.8 trillion in unfunded obligations over 75 years. Social Security adds another massive chunk. Federal employee benefits, $15 trillion. Calculate everything including unfunded obligations. Federal fiscal imbalance reaches $162.7 trillion. Add state and local debt, you're looking at over $200 trillion total. Some estimates push north of $300 trillion. This is the real number, not $38 trillion. Between $200 and $318 trillion in actual obligations. America doesn't have a debt problem. America has a financing problem. Every empire in history shared one fatal weakness. They depended on others willing to lend money. Rome, Spain, Britain, all collapsed when mathematics stopped working. America seemed different. We convinced the world they had to use our system. Want oil from Saudi Arabia? Need dollars. Want global trade? Hold U.S. Treasury bonds. This was convenience, not coercion. Dollar was best option available. But January 1st, China made convenience optional. Digital yuan isn't replacing the dollar everywhere. It just creates parallel system where countries bypass dollars when more efficient. That's happening now. Project mBridge volume surged to $55.49 billion as of November 2025. 2,500-fold increase over 2022 pilots. Digital yuan represents over 95% of settlement volume. Over 4,000 transactions involving China, Hong Kong, Thailand, UAE, Saudi Arabia, all trading in own currencies. No dollars. Think what this means. Thailand buying oil from Saudi used to convert baht to dollars through American banks. Then Saudi converted dollars to rials. Every step involved American infrastructure. Every step generated treasury demand. Now they transact directly on mBridge. Instant, cheaper, no dollar needed. $55 billion in volume is when mathematics change. Before showing you 4 collapse stages, if this adds value, hit subscribe and notifications. This channel delivers analysis institutions don't want you accessing. Your subscription supports independent research. Stage 1. Invisible debt explosion. America pays $981 billion in interest over last 12 months. October 2020 paid $345 billion. Nearly tripled in 5 years. Average interest rate reached 3.362% versus 1.552% 5 years ago. Every 1 percentage point rise needs extra $380 billion annually just for interest. Interest now exceeds Medicare spending. Exceeds defense spending. Spending more on interest than protecting country or caring for seniors. Think $500,000 mortgage at 3% costs, $15,000 annually. Same at 6%, $30,000. Didn't borrow more but cost doubled. America's mortgage is $38.4 trillion. Every point matters enormously. Stage 2, payment treadmill. America doesn't just pay interest. We constantly roll over maturing bonds. Every week, billions mature. Treasury sells new bonds to pay old bonds, like paying one credit card with another. Only works if someone buys the new card. For decades, automatic. China and Japan needed dollars, bought treasuries. But Japan now holds $1.1 trillion, 3.1% of total debt. China holds $756 billion, 2.1%, numbers declining. Not because they hate America, because they need fewer dollars for trade. When countries trade directly in digital yuan, they need smaller dollar reserves. Smaller reserves mean less treasury buying. Less buying means U.S. must find new buyers, offer higher rates, or print money. All three make problem worse. Stage 3. Currency bypass. Digital yuan doesn't need to become reserve currency. Just needs to reduce obligation to use dollars. November 2025. China recorded 3.48 billion digital yuan transactions worth 16.7 trillion yuan, $2.37 trillion, 800% growth in 2 years. China tests digital yuan in Hong Kong, Macau, Laos, Thailand, Cambodia, Singapore. Each connection creates pathway bypassing dollar system. Business in Thailand trading with China previously converted to dollars, paid fees, waited for settlement, took exchange rate risk twice. Now settle directly in digital yuan. Instant, cheaper, no dollar. Don't stop using dollars for everything, but for that relationship, bypass entirely. Multiply by millions of companies across dozens of countries and daily dollar demand drops. Not dramatically, consistently. That's bypass. Not replacement, reduction. Stage 4. Confidence leak. Markets don't price risk in straight lines. They price exponentially. Treasury bonds considered safest asset. Risk-free rate, foundation of all modeling. 10-year yield at 4.24%, January 16th. But what when markets question whether America can service debt long-term? Not default. America never technically defaults because it prints dollars. But what about real value? Purchasing power when bonds mature. When confidence leaks, and it always starts small, rates rise. Not from Fed policy. From risk premium. 30-year at 4.83%. Higher than months. Market pricing fiscal risk, death spiral. Higher rates make debt more expensive. Expensive debt means larger deficits. Deficits require more borrowing. More borrowing means more supply. More supply with questionable demand means higher rates. Once started, hard to stop without dramatic reform. America can't agree on basic budget, let alone fiscal restructuring. Digital yuan isn't causing debt problem causing debt problem. But digital yuan accelerating timeline by removing forced dollar demand. Saudi joined mBridge 2024. America's oldest Middle Eastern ally joining Chinese payment system. Not to hurt America, because it's objectively better technology. mBridge tackles payment inefficiencies. Side effect, massive. Every country using mBridge needs fewer dollar reserves. Fewer dollars means fewer treasuries. Fewer treasuries means higher rates. Higher rates with 38.4 trillion debt. You see the problem. Smart analysts call this slow collapse. Not because nothing happens. Because so gradual people won't notice until too late. America can handle 38 trillion at 2% rates. 760 billion annual interest, manageable. Cannot handle 38 trillion at 5%. 1.9 trillion annual interest, more than defense and Medicare combined. Cannot handle 162 trillion total liabilities if costs rise. Past year, rate of increase averaged 8.03 billion per day, 334 million per hour, 92,912 per second. Question isn't whether sustainable. Clearly not. Question is how long before market forces reckoning. Every transaction on mBridge instead of dollars is one less treasury demand source. Not enough today. Compounding relentlessly. Digital yuan. 95% of mBridge settlement. Platform increasingly used for energy and commodity trades. The two sectors generating most dollar demand globally. If settling in digital yuan at scale, mathematics change fast. Why you shouldn't panic, sell everything. Markets don't price systemic shifts overnight. Pound to dollar transition took decades. Dollar dominance erosion won't happen in months. Slow-moving tectonic shifts. No clear alternative yet. Euro has problems. Yen not fully convertible. Gold can't scale. Bitcoin too volatile. Dollar remains best in imperfect choices, but best available, very different from no alternatives. Timing, impossible. Could be right about direction, wrong about timeline, lose everything meanwhile. Market stays irrational longer than you stay solvent. Biggest losses from leaving too early. What do you actually do? Understand this is transition, not collapse. Dollar system not ending next month, but unchallenged dominance clearly ending. Transition takes years, decades, but has real consequences. Watch interest rates extremely closely. Net interest forecast 13.85% fiscal 2026, 14.11% 2027, 14.52% 2028. If accelerating faster, that's critical warning. Pay attention Treasury auctions. Watch bid-to-cover ratio. Watch yield. If difficulty selling at reasonable rates, slow collapse accelerates. Diversify but don't abandon system. Still need dollar exposure. Still need Treasury for liquidity. But only dollar-denominated assets increasingly risky. Focus real assets, productive capacity, currency uncertainty, cash flow assets hold value better. Businesses, real estate, infrastructure, farmland generate value regardless which currency dominates. Stay invested but stay informed. 318 trillion narrative makes people think dramatic moment coming. Crash, default, crisis on news. Not how empires end. They end slowly. Revenue falls short year after year. Costs rise gradually, then suddenly. Confidence erodes until cascades. Mathematics breaks slow motion until it doesn't. Early stages of fundamental shift. Digital UN One Piece making rest possible. China integrating into WeChat Pay and Alipay. 1.4 billion people comfortable with digital currency. When using for cross-border, when businesses settle trade to save money, network effects kick hard. More usage, more infrastructure, more adoption, less dollar dependency. Every 1% reduction means less Treasury demand, higher rates, higher servicing costs, compound over decade, 38.4 trillion becomes 50 trillion at higher rates with fewer buyers. Mathematics doesn't work. Restoring balance requires 14.6% tax increase and equal spending cuts. Translate that. Raise everyone's taxes 15% while cutting every program 15%. Medicare, Social Security, defense, everything. Not politically possible. Debt keeps growing. Interest rising. Problem gets worse. 5 to 10 years before costs genuinely unsustainable. Before market demands much higher rates. Before mathematics breaks completely. Terrifying thing. Won't see coming. No countdown clock. Markets function normally until don't. Digital yuan accelerates timeline 2 or 3 years. Not destroying dollar directly. Removing forced demand masking how serious problem became. First time in history, credible alternative infrastructure doesn't require dollars. Not conceptually, actually built, functioning, processing billions real transactions. November 2025, China processed 3.4 billion transactions worth 16.7 trillion renminbi, $2.3 trillion. Real volume, real businesses, real trade. Technology exists, works, network growing monthly. Incentives align perfectly. Debt mathematics worsening monthly. 4 factors haven't been true simultaneously. Why this time carries different weight. Empires don't fall when debt too big. Fall when debt becomes inconvenient. 75 years, lending America was convenient. Safest. Most liquid. No alternative close. Convenience eroding now. Digital yuan not making lending impossible. Making it optional in new ways. When lending most indebted nation becomes optional, not obligatory, price goes up significantly. Mathematics harder. Sustainability questionable. Where we are. Not edge of cliff. Slope getting steeper monthly. Don't sell everything today. But understand ground shifting in ways haven't happened in lifetimes. Certainties becoming uncertainties. Watch interest costs monthly. Watch auctions closely. Watch digital currency adoption. Collapse not coming future moment. Already here. Move so slowly won't realize until look back 5 years. Change January 1st, 2026 when China made digital yuan true alternative. Everything after mathematics playing out. Nothing breaks tomorrow. Mathematics already broke. If this opened eyes, hit like and share. Comment how you're positioning. Marcus Caldwell reminding you those who see shift early don't just survive, they thrive. Stay sharp.